Hey traders, Nick Shaheen here looking at the small caps. IWM is the ETF, RUT is the index. This is the ETF. This is today's action intraday. 5-minute candles, so it's somewhat for the fast traders, but the point of this video is to kind of give a glimpse as to why technicals matter and why I keep lines on the chart. Everybody say, why do you so many lines? Like, I can ignore everything on the chart except the lines that I have in front of me. So for example, because they come into play most often, almost all of them. So this is 107. This is today. Today is what, 3/19, Thursday. So we had a rally and then it failed. It failed just where it failed yesterday. So I pointed to the chat room. By the way, there's a link to the chat room below. We do great work in there. Also subscribe to the YouTube channel. That's free. The link down below is a free chat, free test of the chat. So I noted that they said, why is it failing? And somebody said, it looks like it's going to pop into the close. I said, I don't think so, because I had this line. And this line, I said, I didn't remember when I drew it, but I knew it was a long-term line, and it showed up on my 5-minute chart. That happened to the SPY last week, and it gave me a target of 242 to 238 when it was still up in the 50s and 60s. So it was a good trade there for the same reason. So here it came into play. I was like, when a long-term line shows up in here, at least one of them, that green one may be another one that I'm looking, then it comes into play. So I need to see where that line came from. And I will expand the time frame and we'll see. All right, so I'm going to change the time frame on this one. Magic of Television, this is the same chart, absolutely the same chart. All I did is change it to a weekly chart for 10 years. So now it zooms out and every candle changes from 5 minutes to a week. And you can see this correction, more violent than anything we've ever seen. That goes back to 10 years. So, and this is where I started to draw the line. And I called it, at the time, it was a line, I said it was a must hold or 103 would come. And that's where the green line in 103 I drew. And eventually it failed, and where did they bounce? At 103. So the technicals prevail. The reason why I picked 103 is because of what happens in the past. So the charts, now even more than before, they play a role because the machines trust them. And by that I mean the machines are programmed. I know they call it AI. It's not. It's bullshit. It's smart code. It's not artificial intelligence yet. It has some aspects of it, but it doesn't decide to go learn a new skill in order to come trade better. So now it learns the patterns better, and it improves along the same lines that they told it to learn. But it doesn't decide to go learn Chinese in order to read the headlines better so it can come back and trade better. So once it starts doing this stuff, then we should hide because we're going to lose that fight. So in this case, the charts matter. And this is the line that showed up today into the chart. So it played a big role in the past. So it must play a big role here. So, and it's not a coincidence, once I zoom back in, that it was to the frickin' penny where 2 failures happened. It's not a coincidence. People say, oh, blah, 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 the charts, whatever. The headlines don't matter. They bring about the price action that was going to unfold. They matter from the sense they act as a trigger and they may amplify the move. But the chart patterns usually unfold the way they need to. It's a self-fulfilling prophecy. It's not that they're smarter than you. They happen because a whole bunch of people believe in them, and if everybody's looking at the same thing, that same thing is going to happen. Okay, so this is the mentality. So the lesson here is that technicals matter. Spend some time studying them just as a consultant. You don't have to use it to trade. I'm not recommending that. I'm just recommending to pay attention. Like if I wanted to short right here, I wouldn't. For why wouldn't I? So, and this is where the second part of this movie starts, which is the trade idea. Or when trading, it's important not to make mistakes. So this week's low, the flash low yesterday on the huge crash day, was 95.65 in the IWM, which is insane. It was 170 not too long ago. So this is what eyeball, a huge correction. Nobody talks about it. They're still talking about, oh, we got to test the 2018 low. That's the 2018 low. And that's where we are right now in 2,000 stocks. Yet they're talking about the Dow and the SPY. So the small caps moved first, fell hardest, and maybe they'll turn first. So why would they turn? I'm not calling a bottom. The bottom is a process, not an actual event. Most often we have had V bottoms, but in this case the problem has severe consequences. I know a lot of business owners who own 50-60 restaurants and they're shut down, most of them. Some Subways, some Taco Bells, another chain I can't remember, same owner. So he has some Subways still open, whatever. So there's going to be pain that some businesses won't survive. I'm not doing whatever Ackman did the other day by bawling his eyes out, a billionaire crying and having a nervous breakdown on TV. That's not the same message. The message here is the crisis is sentiment. Everybody freaking freaked out because our leaders freaked out. And when the freak out happens at top, it trickles down and it amplifies. That's why we have no toilet paper. So they freaked out, they freak everyone out. The sentiment is the problem. The consequence of that problem is actual concrete things. The P&Ls are going to be decimated. In 2000, this is worse than 2008 because it's different. In 2008, the problem was in financials, the banks, real estate, whoever was supporting that, which is a big part of the economy here, right? And it had repercussions all over the world. But it was a balance sheet problem. This problem, this freak out, the sentiment freak out, caused a profit and loss problem worldwide. So every business of every company on every country on the planet is going to be severely impacted. Different than one segment having a balance sheet problem. This is every country, every business, anywhere is going to be impacted. So it's not going to be a V. We're going to probably have a V spike, but I think it's going to take time to heal those companies. It's going to cost trillions of dollars. It has already cost trillions of dollars. So it's not going to be a V. If it is, I'm happy. I'm long too. So, but here's the thing. Small caps, right? Look at that. So that's years ago, right? So this is not a coincidence. If I look left, so what are these? These I call pivot zones. They fell to here. To lose this bottom, it will take another leg of bad news. So this virus will have to turn killer and super fast. Right now, it's not a killer. It kills very few people compared to the people it infects. I know people are going to have issues with that statement. Go do the math. It's a mathematical problem, not a medical problem at this point. If it's going to go exponential, it's going to mutate and then get out of control and the vaccines fail, then this could happen. But if I'm shorting here, I'm playing Russian roulette. If I'm going long here, long term, I'm playing the odds. That's my opinion. I'm not recommending for people to go long, but if I'm shorting, I'm making a mistake long term. So let's say it this way. If I short and if I go long and my brother shorts right here, and we come back in 2 years, 3 years, 1 year, 10 years, depends on the time frame. I bet you I'm going to be winning more years than him. So that's the easiest way I can say it. So technicals matter. I just showed you why on the daily chart, on the 5-minute chart. Turns out the line that I drew in 2013 here came into play again. And there's another line that I just saw because I expanded to 10 years. There's no absolute truths. There's a whole bunch of headlines right now, some of it true, some of it estimates. The only truth is the actual price chart. That's what it is. That's the only true thing. Price. Here we had an inverse head and shoulders, right? And the target with it is about this much from here, eyeball. Let me see, is this one as big as this one? Okay. And look at this. I just did it on the fly. It matches up with this. There are no coincidences. So the machines see this inverse head and shoulders. They know that the measured move is the depth of this thing. And from the neckline, when it's breach out, it's going to go as long as this thing. And coincidentally, wink, wink, it's right smack in the middle of these two lines, which is where we're at right now. There are no coincidences on price. This is actual fact, not a headline. This is fact. Price that has happened, and here we're looking at it. All right, next signing out. Sign up. Get into the chat. It's Super fun. Open every day, all day.